Hey everyone, welcome back to Corporate Decoder. Today, Amass Brands Inc has filed an 8, and I am seeing a move that could signal a significant shift away from a key agreement. Quick note, this is not financial advice, just my take on public filings for educational purposes. Essentially, the company is settling a large purchase obligation for a much smaller cash amount and some creative options for future business. Amass Brands, known in the beverage space, has been active with its filings. This particular report, an 8K, is filed for significant corporate events. The main event here happened on the 29th of July of 2026, and the report was filed shortly after. Amass Brands Incorporated, as they are formally known, is the company we're looking at. Their common stock trades under the ticker symbol AMSS on the Nasdaq Global Market. That is the ticker symbol you'll see AMSS. This filing is with the US Securities and Exchange Commission, or SEC, as it is commonly called. The form itself is an 8K, which is used to announce major corporate events that shareholders should know about. The core of this filing is an agreement that Amass Brands entered into with a company called Full Glass Wine Company, LLC, or FGWC for short, and another entity, Full Glass Licensing, LLC. This new agreement is called a side letter agreement. What it does is change a previous deal. The original agreement was a multi-year wine purchase agreement from February 2024. Under that old deal, Full Glass Licensing was supposed to buy a significant amount of inventory worth $4 million. We're talking about roughly 111,333 cases of wine. Now, with this new side letter agreement, that $4 million obligation is replaced with a settlement amount of just $427,000. That is a massive reduction. Part of that settlement, a small portion of about $31,750, was due very soon by the 31st of July 2026. Once paid, Amass Brands would release some wine inventory. The remaining larger chunk of the settlement, around $406,000, is what is really interesting. It is a deposit that Full Glass can use in one of two ways. The first option is for Full Glass to buy more wine from Amass Brands. They would purchase over 135,000 gallons of wine, with a total price of about $676,000. But here is the catch. Instead of paying all of that in cash, they can use that $406,000 deposit towards buying back stock that Amass Brands holds in FGWC. The second option is even simpler. Full Glass can just use that $406,000 deposit exclusively to buy back Amass Brands equity in FGWC without buying any more wine. There are some penalties if payments are late, a $10,000 charge, but there is a short grace period. And if those late payments aren't fixed, Amass Brands has the option to just scrap this new deal and go back to the original, much larger $4 million obligation. There is also a provision about what happens if FGWC gets sold. If that happens within a year and a redemption agreement was already in place, Full Glass would have to pay Amass Brands the difference between what Amass would have gotten in that sale and the settlement amount they already received. As part of this deal, Amass Brands also acknowledged that Full Glass has paid off a separate promissory note. And importantly, both sides are releasing each other from any claims related to these agreements. This means they are both agreeing not to sue each other over past issues connected to these deals. This leads us directly to the next part of the filing because of the new side letter agreement. The original multi-year wine purchase agreement is officially terminated. However, some parts of the old agreement are still in effect, but only to make sure the new settlement terms can be properly handled. Finally, this section lists the exhibits filed with the report. The most important exhibit here is the side letter agreement itself, filed as Exhibit 10.1. This is the document that details all of these changes. The report is signed by Mark T. Lin, the Chief Executive Officer and Principal Executive Officer of Amass Brands Incorporated. So what is the story here? Amass Brands was supposed to sell $4 million worth of wine. Now, they're settling for a fraction of that, $427,000. With a significant portion of that being tied to how Full Glass wants to handle their investment in FGWC. This looks like a way for Amass Brands to get cash up front and close out a large, potentially problematic contract while giving Full Glass flexibility in how they manage their future wine purchases or investments. It is a strategic move to de-risk and simplify their financial obligations. The risk I am watching is whether Full Glass chooses the equity redemption route, which would mean less direct cash for Amass, or if they opt for future wine purchases, which would generate revenue but also require continued production and fulfillment. What I'm actually looking for is how this impacts Amass Brands' cash flow in the short term. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please like this video and subscribe for more. Join our Discord in the description.